Here at Together, we talk a lot about how mainstream lending criteria are struggling to keep up with real lives. In this video, we're going to explore this idea and look at some of the situations where we may be able to help. Broadly speaking, hurdles to a mortgage application with a mainstream lender can be grouped under 4 headings: income, property, credit, and purchase or transaction. We're going to look at each of these in detail and pick out real-world examples of when our common sense approach means we could potentially help. First, we're going to look at income. If someone has a single permanent full-time job, great, but if they don't, we could still help. There's been a huge boom in self-employment over the last 10 years, and that means many people are under the 2 years trading threshold specified by some mortgage lenders, whereas we'll accept just 12 months trading. We also recognise that many older people are choosing to work beyond traditional retirement age and combining this with their pension income, so we'll accept both and can lend into retirement providing the repayments remain affordable. We know that many traditional unskilled jobs in the retail and hospitality sector are now on a 0 hours basis, and our underwriters will consider applicants employed on these contracts. Over recent years, many people have recognised the potential in property investments, so if someone receives additional income from landlord activity, we will consider this too. And if they rely on benefits to top up their income, perhaps because they're a carer or have a long-term disability, we may be able to accept this as well. But what about when someone's income isn't this simple? Perhaps they do some occasional freelance work, but they're semi-retired, so most of their income comes from a pension, and they also have a rental property. This is where our common sense approach to lending comes into its own. Next, we're going to look at properties. If there's something that makes a property harder to mortgage, we could possibly help. We know that Britain is re-urbanising and building space in our cities is at a premium, so residential towers routinely scale more than 6 stories. We can happily lend on high-rise properties. We'll also look at cases involving properties of non-standard construction. It might be an ex-council prefab made of concrete. It may be a quaint, picture-perfect thatched cottage. Or it might be an ultra-modern sustainable house with a timber frame, like some of the self-builds you see on Grand Designs. We can also look at cases for properties deemed uninhabitable because they need major renovations to restore kitchens and bathrooms, for instance. Many of our customers are property developers and investors, and we recognise that these properties often don't remain uninhabitable for long. And we'll look at cases where the property has poor comments on valuation, so if remedial building work is required, for instance, we could help. Lastly, unlike some lenders, we're often able to help in cases where a property is being acquired prior to a change of use or conversion, and even when there are existing tenancies that don't have long left to run. Thirdly, we're going to look at cases involving little or imperfect credit. Here we're talking about people who are based overseas or have recently moved to the UK, so have little or no UK credit history. We're also thinking about those people who've had adverse credit events in the past, like CCJs or defaults, perhaps following periods of ill health, or after a relationship breakdown. And we'll also look at cases for people who've used payday loans in the past, but have now broken the cycle. Naturally, we'll always look at people's credit file, but we don't make our lending decisions on the strength of their credit score alone. Lastly, we're going to talk about unusual purchases or transactions. We know that house prices have made it difficult for buyers to get onto the property ladder in recent years, leading to the introduction of shared ownership schemes. We can often lend on these cases, even if the borrower has no deposit to put down, and we can accept up to 4 incomes for affordability. This is ideal for friends who are buying together, whether to live in as a house share or as an investment for the future. Right to buy schemes continue to offer council tenants a more affordable route into home ownership, and we can often lend the full purchase price after scheme discounts is applied. We can also look at cases where family members are helping applicants onto the ladder with financial gifts or discounts on properties. This may include customers remortgaging to release equity from a property they own outright. Our pragmatic approach to underwriting means we can work with your completion deadlines in mind, occasionally funding in a matter of days, which could be the difference between securing a great deal and not. And our 40-year maximum term for first charge mortgages and maximum age of 80 at the end of term also means we can help customers who are looking to borrow later in life. In fact, some of our commercial loan products have no maximum age at all. Lastly, in the commercial finance world, we welcome applications from limited companies, trustees, and pension funds. If someone's circumstances are fairly run-of-the-mill, aside from a hurdle or two, they may be able to secure the borrowing they need through a mainstream lender. But if there are more, think of us. Let's look at a typical example from the world of personal finance, involving Michael and Laura. They're first-time buyers and need space for Laura's mum, who has chronic ME and needs to move in, so they're looking at shared ownership, as it makes the large home they need more affordable. Michael's a self-employed plumber. He's experienced and earns consistently, but only struck out on his own 18 months ago. Laura is her mum's carer and claims a carer's allowance. She also has a part-time retail job, which is on a 0-hours basis. They're putting down a £3,500 deposit gifted by Michael's parents. We would happily review their case, with a view to loaning them up to 100% of their share, minus their deposit. We'll accept Michael's self-employment and take both Laura's part-time earnings and carer's allowance into account when looking at what they can afford. Then they could borrow over up to 40 years to make the repayments more affordable. If you're wondering if we could help, give us a call and we'll talk it over.